What's good, everybody? It's Z from The Mask, and today I'm going to go over why I personally believe that market crashes like the one we're currently experiencing on gold, NAS, silver, all of it, are actually one of the best things that can happen to you as a trader, as an investor, as a money manager, anyone related to the markets at all. Now, the reason I personally believe that market crashes like this one, let me go to the 4-hour time frame here instead of the 5-minute. Crashes like this. The reason I believe that these are actually good for you is the disproportionate return that you can get on them. If we take an asset like gold, something that's very popular, especially recently, to invest in, the reason market crashes are great is because your upside, ironically enough, is actually significantly larger after a crash than the initial downside of the crash. What I mean with this is let's measure these two highs and lows here, right? We have this point up here and we crash all the way down to here. Now look at this. This is 24.35% of a crash, okay? That's a big crash. It's almost a quarter of the price. However, now let's do the inverse. Let's go from down here all the way up to here again. And now you can see all of a sudden it's 32%. It's the same distance. It's the same point distance. But because the growth in order to recover is much larger than the initial crash needed to drop the price that far, you get to have a disproportionately massive return on any investment that you make during a crash. If you make a purchase that is 10% off, okay? You go from 4,000 to 3,600 or from 5,000 to 4,500. It's 10% off, right? If it goes to the same place again, you're going up by 11 or 12%. So you only had a 10% downside while having a 12% upside, 11% upside. The same way that, for example, if you lose 50% of your trading account, you now need to make 100% to bring it back up. So if we do the math behind that, you have a $100 trading account and you lose $50, that's half of it, right? That's 50%. But now, in order to get back up to 100, you need to make $50. What is $50 of $50? It's 100%. You can apply that same concept to markets. Whether, again, you're a money manager, you're an active day trader, you're an investor, you're speed running investing like I do with the ATGA system and the Monarch system. Regardless of what you do, market crashes can be massive benefits for you if you just accept the fact that they disproportionately work in your favor. They do the work for you. Because again, you have a much more limited downside compared to a disproportionately large upside. If you have a crash of 20%, it's going to recover 25% back to the upside, or even 30% back to the upside. Again, remember, here we crashed 24%, but going back up to it, we're making 32%. The extra 8% just spawned out of thin air. We just get to have that free 8% for nothing. Like, we do no work and we get the extra 8% gain. We get to put our account in here and just make extra money for free. The gains are completely disproportionate on a market crash. So if you trade a system like ATGA, like the Monarch system that we have here, where you simply buy into the market at price drops instead of timed intervals, instead of buying every Monday or every second Monday or something of the month, or buying every 2 weeks, every 4 weeks, whatever you might do. Instead of doing that, what you do is you just put buy limits at specific prices instead of specific times. You can catch these crashes and actually partake in this massive disproportionate upside potential once the market recovers. You can use this to your advantage in markets like NAS 100. Not so much silver. Silver is more of a neutral asset, but something like gold, something like Bitcoin, something like NAS, the US 30 or the S&P 500, any other permanently rising asset, okay? Take any asset that you know for a fact over the long term will go up in value. Gold, for example, is a store of value. People use it as an investment. And because they use it as an investment, that means it will go up over time. the value of it will increase over time as it's being used to replace a weakening dollar. The same goes for NAS 100, because the NAS 100 is driven by the top 100 tech companies in the US, which means as long as the tech sector continues to grow, as will the NAS 100's price, meaning its value will continue to go up and up and up. And the benefit you have with the NAS, much like the other ones like the S&P 500 and the US 30, is that they are self-optimizing assets. Now, what does it mean to be a self-optimizing asset or to have a self-optimizing asset? It simply means that you have an asset that continues to improve itself. So if you know what the NAS 100 is made of, being the top 100 tech companies in the United States stock market, if company number 100 suddenly decides to perform worse than company 101, company 101 will simply take its place. They will recycle. They will cycle number 100 out because it started sucking a little bit, and cycle 100 in its place instead. So if, let's say, Tesla at, I don't know, number 4 or 5 starts doing way better than Nvidia at number 1, Tesla will now be number 1. And Nvidia will sink to spot 3, 4, 5, and they will cycle out based on their performance. Which means if any of the companies start doing poorly, the ones doing better will simply come in to replace them. Meaning you will never really run into an issue where the market goes to zero. Because if they all start performing terribly, they will simply be replaced by assets that are not performing terribly. And in a similar fashion with gold, seeing as it's an investment vehicle that is also largely bought by huge hedge funds, huge banks, as just currency holdings, they themselves, the people that control the markets, don't want the price to go that far down because then their stores of value are losing value. They will intentionally keep the price at a steady increase over time, which means you can just shadow their moves and benefit passively. Again, using the completely disproportionate gain that you can receive from market crashes. Market crashes can genuinely be your best friend. You have to remember that in these market crashes, it is the exact same asset, okay? All that's happening is that you get a discount on the same product. Remember that you are just getting a discount on the same exact product, okay? If the gold price is dropping, that's not because the world's supply of gold suddenly got a little bit less shiny. Okay, gold is still shiny. It's still great for electronics. It's still great for jewelry. It's still great as a stable currency. It's just a temporary correction in the market. It's a discount. The same way that if I give you a brand new iPhone 27 and I just say, okay, I'll knock $500 off the price, the camera doesn't suddenly get worse. The screen doesn't suddenly lose resolution because I'm giving it to you for cheaper. You're still receiving the same phone, except it's cheaper now. It's the same thing with the markets. You're receiving the same share, okay? You're receiving the same ounce of gold, the same collective ETF. You're still receiving the exact same asset, except at a discounted rate, which is just pure benefit for you. If you get a $2,000 iPhone for $1,500, you can simply turn around and sell it to someone else for $2,000. And you just made yourself $500 profit because you happen to get it at a discount. If I buy gold now at $4,500, I can just wait a couple weeks and sell it to some other schmuck for $5,000 and net myself a $500 profit, multiplied by however many positions I have in, or however many ounces of gold I own. And I make myself a tidy profit. It's still the same ounce of gold. It's still the same product. I can still make the same technology with it, make the same jewelry with it. It's just as shiny as it was before. However, now it's worth a little bit more because someone elsewhere decided they want to pay a little bit more for it. And I use my discount that I got because I was smart and entered the market at the right time to gain an extra bit of profit. That's all you're doing with this. You can turn market crashes into your best friends because of the extremely disproportionate rate of growth from the recovery after the crash. That is all I have for you guys today. Just a quick little 10-minute video, mindset video. Get it out of the way for the weekend, and I hope you guys have a lovely rest of your week.